evening, everyone. Thank you on behalf of Capitant Brussels and AFC Brussels for coming to this event. We were actually very excited to see so many people interested in our topic. My name is Daniel, and I am the Vice President of Capitant Brussels, and I will be one of the moderators of tonight's discussion, together with Charlotte Van Cleef from AFC Brussels. So I believe that we should just already start and discuss briefly what's going to be tonight's agenda. So we will start with a short introduction from Capitant and AFC Brussels, followed by the panel discussion with our two speakers we are very excited about, Mr. Xavier Corman from FinTech Belgium, as well as Mr. Edouard Beauvoir from AiVidens. And at the end, we will also have a Q&A session, but I already encourage you, if you have any questions throughout the presentation, you can just ask them in the chat. And at the end, we will also be able to unmute you if you would like to ask other questions. So, that being said, I think we can just move forward and let Charles Sindeku, the President of Capitant Brussels, to give a short presentation about our organization.
Hello, everybody. So Capitant Brussels is a student organization that is based in 5 cities in Belgium, and it's targeted to students who are really interested in the topic of finance, whether it be asset management, investment banking, fintech, anything related to finance. And our goal is to bring together those worlds closer together to help people to start out a career in finance and answer their questions that they might have about that subject. We provide those through lectures such as these, but also in non-corona times, we also do workshops, and we also organize multiple trips abroad to visit famous financial cities such as Amsterdam or London. You can become a member during the year. A membership cost is €5. To become a member, you just have to subscribe to register, and benefits include goodie bags, writers, access to our events, finance internships announcements, and a certificate. Are you interested in becoming a board member for Capitant for next year? Well, the good news is mid-March, we're starting with our recruitment for looking for new board members. If you're interested, be sure to apply. Thank you very much.
Thank you, Charles. I will now invite Nikki Chen, the finance manager from AFC Brussels, to give a short presentation about AFC.
So thank you, Daniel and Charles. I will just shortly introduce you to AFC. So Academics for Companies was founded in Leuven in 2007. And we actually only expanded to Brussels and Ghent 2 years ago. So we are a relatively new team. And our focus is actually to build a bridge between the academic and professional lives of students. And this is based on 3 pillars. The first one is events, in which we introduce hot topics such as the one of tonight. And then you can click on the next, yes. And our second pillar is workshops. Here, the students can actually apply their soft skill into a practical environment. And actually, there are currently 2 tracks open for applications. So if you're interested in one of the workshops, please make sure to check out our Facebook. And can you go back for a second? And also at the end of each track, you get a certificate, and this one you can put on your CV. Our last pillar is projects, and this can consist of either consultancy projects with companies or internships with startups. And then for the next slide, probably the most important one is that we are also recruiting this month for the new board for next academic year. So, and next slide. So if you're interested, please make sure to check out our Facebook page. I will just give you a second to scan if you want. And then hopefully we'll see you next year. And I can give it back to Daniel, and then we can start the evening, I think.
Yes, thank you, Nikki. I suggest that we don't lose any more minutes and we move to the panel discussion we've all been waiting for. I think that to begin with, it would be very interesting to hear a bit about each of our speakers, as well as what's the main activity of their organization. So I will invite first Mr. Xavier Corman to present us about FinTech Belgium and himself, and followed by Mr. Beauvoir.
Okay, good night, everyone. It's a pleasure to be here. Thank you very much for the invitation because it's always enthusiastic to see students that are interested in finance and more specifically in fintechs. So I am Xavier Corman. I am one of the co-founders and I am actually director of Fintech Belgium. Fintech Belgium is a non-profit association. Actually today it became, and it's now a federation for the Belgian fintechs. So we have approximately 100 members, a little bit more than 100 members. And we are here with a triple mission. The first mission is to promote the fintechs, so to promote our members. The second mission is to create interactivity between the members, so to create much more business, but not only business, is really interactivity. And the third mission is to be the single point of contact of fintechs with the regulators. You have to know that the financial industry is regulated, mostly regulated. Not all companies are regulated, but a lot of them. And so it's a challenge for small and medium new players to be regulated and to follow the rules and to have the rules adapted to their size and their new business, especially with technology. So we talk a lot with the NBB, National Bank of Belgium, with the FSMA, it's the second regulator, but also with the European Commission, the European Banking Association, etc. And so last year, in 2020, we incorporated a new association called European Digital Finance Association, which is the umbrella of the national association. So you have FinTech Belgium, we have France FinTech, you have FinTech Italy, etc. So it's a good way to join forces and then to speak with the European Commission to get an influence on the future regulation that we will get in our market. Maybe you can go on the next slide. Yes, this I already explained. Next. Yes, our members. That's something important. We are not a top-down association. So to tell you the truth, the first meetings we organized, and it was not FinTech Belgium yet. It was with cold pizza and warm beers, and we joined with other companies to talk about fintechs. So it's a grassroots association. So it's very interesting to participate to our events. So it's the way we do. Our mission is to create a lot of events. We have events on different kinds. We have meetups where it's like a conference on a specific topics. We have classroom, we have workshop, and once per year we have a big mass, and we call it the Digital Finance Summit. So it's a one-day event with 400, 500, 600 participants, and we talk about digital finance during one full day. It looks boring, but it's not. It's very funny. Next slide. Yeah, that's another point we created last year, and it will it's going to open in the definitive place in June of 2021. It's a hub for fintechs, and we are by far the largest hub in Europe for fintechs. It's called FIRE. FIRE stands for FinTech, InsurTech, RegTech, and then the E stands for whatever you want, etc., ecosystem, whatever. So FIRE is a place to be for any fintech or also any person who wants to be involved in the fintech industry. And as our definitive place will be next to the central station in Brussels, so very convenient, because by 5-minute walk you can reach almost every bank in Belgium. It's also a good place for international visitors to come and to stay 1 day, 1 week, or to make a meeting. So a convenient place. So you will be much more than welcome to attend events there when the COVID crisis will be over, obviously. Next slide. And to do that, it's not me alone. We are a large team of very fancy people. We have a board. All of them are pro bono, so we are not here to receive money from the jeton, as we said in French. So everybody is doing for free and they are giving free time. And then we have 4 people in the operational team, mostly girls, which is good for the gender balance, and because our industry is suffering from the deficit in the gender balance. And so you see we have 3 different girls, blonde, brown, red, and me, the 4th guy. So don't hesitate to join us during our events because it's very funny and very interesting. And I think this was the last slide. Yeah.
Yes.
Thank you.
Yeah. Thank you. Thank you as well for your introduction. I will invite now Edward to present himself and AiVidens.
Yeah. Thank you, Daniel. And well, Xavier confirmed it's really funny because AiVidens is one of the members of FinTech Belgium. Even though this year, I mean, well, because of COVID, we haven't attended that many events, but it's really good to be part of FinTech Belgium. Right, so just to quickly present myself and what we do. So I'm one of the founders of AiVidens and I'm CEO of the company. So I was in your shoes actually 20 plus years because I finished Solvay in 97. So I was from the 97 promotion where I studied the finance, and it's true that back then were different times because we had many opportunities, but actually the communication means were very different. And the notion of fintech, the notion of startup was not really existing. Well, as we see it today, right? Back then, so we had different views of the market when I ended up Solvay in 97. But in 2 words, what we do, and as you can see here, we actually have created a software that helps companies getting paid on time or even before, and that helps them to that helps companies to optimize their collection processes, and we use artificial intelligence to do that. Now, if you just move on to the next slide. So we created the company, well, it's still a young company, right? So it's 18 months, a bit more old. So we created it back in May 2019, so just before COVID. We have a series of interesting customers today, among which NG, but more on the services side. We have many partners, and that's something that I will explain during the conversation or during the call, is why we have decided to work with so many partners, especially now in COVID times. And we have been part of different acceleration programs. I can talk about it as well. And we are financed by ourselves. That's first of all. So we have invested in our own company. But we found subsidies, and that's why you have Innoviris, which is the innovation platform in Brussels. We have public financing coming from Finance Brussels, and we have private investments coming from B Angels. So that's more or less who we are. If you move on, next slide. Yeah, we solve actually two different types of issues. We solve issues from a macroeconomic point of view, and we solve issues at an operational point of view. From a macroeconomic point of view, actually, overall, and what we see is that still, I mean, it's obvious for everyone, right? Cash is king, working capital is extremely important in companies, and still, when we speak about dubious payments or dubious customers, the cost related to those customers is still pretty high compared to the turnover of companies. We speak about 2.3%. And bad payments explain still 25% of SME bankruptcies. Now, with the COVID, the situation has increased drastically for different reasons. I mean, first of all, you know, many businesses have had to close their doors over the last 12 months. But still, what is still to happen is that, I don't know if you follow that, but there are discussions from the Eurogroup. And Eurogroup, for the moment, is considering actually not supporting companies anymore. And they would start stopping their support to businesses second half of this year. So it will increase actually the issues related to cash. Next slide. From a pure operational point of view, we solve issues, well, operational issues related on the one hand to the fact that and I would just focus on two. You can read it on the slide, but the first one is extremely important because it's the notion of anticipating payment issues. From a pure process point of view, what we see is that companies start following cash or following customers once issues have arrived already. And what we do with artificial intelligence, we actually predict those issues. So we allow companies to anticipate payment issues. And second thing down below is really to help companies to improve their cash accuracy, because again, with artificial intelligence, we can play with the payment patterns, with the risk associated to the different payments of the customers, and that helps us to rebuild, if you want, the cash forecast of companies was based on predictions. Next slide. So, in other words, like I said, we predict actually when customers will pay their invoices. We segment portfolios according to payment patterns, different types of risk. And we use that on the one hand to work on a strategic level and build really specific reports that CFOs can use or head of collections can use to really better understand the composition of their portfolio and take medium-term decisions on what to do with their customers. Do I need to stop working with some customers? Do I need to help customers in financial difficulties because myself I'm long in cash, and so on? And it helps as well companies to really improve their collection processes and then better focus on their customers and better improve their relationship with customers when it comes to finance management. Because very often when we speak about customer experience, companies think about CRM, customer relationship, they speak about new contracts, new prices, but they never see it as an end-to-end process that ends up with the financial management, actually. Next slide. Yeah, and that will be my last one. So to do that, well, you see it's very practical here. So we actually sit between the operational data and collection execution. And what we do with artificial intelligence, on the one hand, we do a lot of calculations based on data that we get from our customers and based on market data that we get. And it helps us enriching the debt portfolio. And it's from that enrichment of the debt portfolio. So debt portfolio, it's the receivables portfolio of customers, if you want, from a financial point of view. And it helps us then to analyze the current position of the portfolio or the cash position, as well as the evolution of the cash or the evolution of the portfolio. And with that analysis, the software will help companies to prepare their collection processes by offering or proposing best channels, best tones to use, or even best action to do with the customers to better collect the money back. In a nutshell, that's what we do. So it's super pragmatic. It's very niche as a software, and it's a SaaS solution. So software as a service. Yeah, just you can skip it.
All right, thank you both for your very interesting introductions. I believe now we can move to other questions we prepared for you tonight. And I think a very good one to start with would be the fact that we can all agree that fintech has become quite a buzzword in the financial world in the last couple of years, and perhaps even more during the current pandemic. And one question I would like to address you both is, what is, in your opinion, the main value added the fintech sector brings to the financial industry?
Yeah, and Xavier, if that's fine, I would like you to take the first one, because I think, first of all, we should define the notion of fintech. And I think FinTech Belgium has a very good definition and very good view on what is a fintech.
Yeah, we don't have, that's a good definition. It's very difficult to define what is a fintech, because what is a fintech today was not the fintech 5 years ago. So a fintech is finance and technology. Whatever the bank you are using, you have an application in your mobile phone, and it's finance and technology. So is a bank a fintech? When a fintech creates a very standard product with a layer of technology, is it really a fintech? So you see, definition is quite tough. So at the FinTech Belgium, we stop to create categories. For us, FinTech is a company was the main focus to use technology for finance, whatever the size of the company. So it's a question of spirit much more than activity. And so the difficulty today with FinTech is that FinTech is much more, much wider than only finance. It's why the terminology is moving from FinTech to digital finance. Because in FinTech today, you have also InsurTech. So it's everything about insurance and technology. And then you have RegTech. RegTech is regulation and technology. I told you that companies in finance, they are regulated, so they have to apply a lot of rules, etc. How to do that? It's with technology, so it's RegTech. Then you have accounting tech, because when you are doing finance, you need accounting, so you need tech with accounting. So you see, it's difficult to create categories. Anyway, if it's digital and finance, we can talk about digital finance and then FinTech. And it's why our European association is called European Digital Finance Association and not European FinTech Association. So yes, everything is moving. It's not something fixed, but we can say that everybody today is using FinTechs, and that's a good point.
Mm-hmm. And what you mentioned is very important, because if you come back to the business we are in, actually in the strict meaning of FinTech, we would not be a FinTech, but actually we are, because we, I mean, on the one hand, we provide technological services in finance, right? And in that case, you understood, mainly geared towards payment, cash and accounting, right? So it's not even in one category, but it's more. And when you even go deeper, we are even somehow RegTech, because we can as well calculate risks related to customers, and customer risk management fall into RegTechs. So that's one thing. The second thing is related to our customers. We at AiVidens, it's true that we have potential customers in the financial services industry, so insurance and banks, and we are talking to them. But it's true as well, because our services are much wider than purely banking and insurance. We offer as well, we have customers from the media industry, from the utilities industry, from the servicing industries as well. And that's very important to me to really generalize the notion of FinTech. But to come back on what you said, Xavier, as well, FinTech doesn't mean neither startup. And that's very important to understand as well, because, for example, before we decided to create AiVidens, I was working for a much larger company called Sopra Banking Software. Well, it's former Calata and Waters, for those who know. We were, well, they are still doing, I left since then, but it's €500,000 in terms of turnover. And when I was there heading marketing and communications, we were considering ourselves as being a FinTech, because we were offering financial technological services to the financial services industry. So we really need to understand it much wider than what it is.
Thank you both for these interesting insights. So if my understanding is correct, basically it's very hard to define FinTech. And yet, one curiosity I would have, and this I will address it to you, Edward, is the fact that, as you already presented, AiVidens essentially uses artificial intelligence and helps clients to better manage and gain insights about their receivable portfolios. And somehow I'm wondering, because as you said, there are so many types of FinTech companies who offer different solutions, but what triggered you to follow this specific area? Was it a need in the market? Was it the research you made that you venture into it?
Yeah, good point. Well, I need to explain a bit of my life, if you don't mind, before I answer the question. So, well, first of all, and that's important. When I said I'm from the '97 promotion. Back then, really the purpose when you ended up studies in finance was to work for the big brands and really to be part of a big company, you know, egos and big projects, and everything was to be big, right? And what happens in your life, I mean, at least back then, well, the notion of startup did not really exist. And I mean, working for a very small company or an SME was not really well seen back then, right? It was not really hype. And what happens is that in your life, while you start working for big companies, it works and you evolve and you start and you change projects and so on. But in the end, you miss something. And it's what happened to us. We felt like we were missing something, plus the fact that we were falling into a lot of politics and so on. And after being part of, 7 years in the executive committee of this large company, with my two ex-colleagues, we decided to create a company. Now, I say a company on purpose because our goal was not to create a fintech, or our goal was not to be in any categories. We just didn't know what we were willing to create. The only thing that we knew is that the three of us, because we have three founders, were completely complementary. One R&D, so purely development and research. The other one was more implementing, focusing on servicing, and I was more focusing on marketing and sales. The common point that we had was our experience in software. That's it. And the other thing that we were willing to do, the three of us had an interest in artificial intelligence. And that was our starting point. Now, artificial intelligence, and Xavier would certainly confirm, it's pretty vague. So what can you do with artificial intelligence? Well, more or less everything, right? But when you face a customer and when you face the market, you cannot say, well, look, I have a solution to every requirement and every needs that you have. So we had to be really focused. And that's why back in our stories, we came to this idea of saying, well, look, AI is super vague, super vast. We have experience in software, meaning standardization. I had a background in finance because I studied finance and I did finance in 10 years before I moved on to other jobs. And we decided actually to be super focused and to create use cases. But instead of focusing on one, we decided to be creative and think about 5 use cases that each of us had in mind. And with that, with the knowledge and the people that we knew on the market, we decided to visit every people on the market that we knew as part of our network and to tell them, look, we have those ideas. We want to standardize processes. We want to standardize AI, make it cost-friendly. We have those 5 ideas, 5 use cases in finance, in HR, in sales, and in procurement. Would you buy one? Which one would you buy and why? What's your problem behind exactly? And please rank it in order. And the one that came out with the highest level of priority is what we did. And that's why we decided to start with that. So it's super niche like the other ones, but we decided to start with that, make it work, focus on that, put the whole energy you have to make one work, and then you start deploying and you go beyond. And you will see that you probably will have questions about that later, Daniel. The situation has changed a bit because we evolved in different ways than the one that we were willing to evolve originally. But really the idea doesn't come from us. It comes actually from the market and from different surveys that we did with our network.
Thank you. That indeed sounds a very interesting progression. And now to kind of link it to what we discussed already, again, we said that essentially we don't really try to categorize the fintech companies into different categories. But at the same time, a question I would like to address to Xavier, my curiosity is, for example, in Belgium, in the fintech industry, what would be the dominant type of fintech technology that company offers? Because, for example, as Edward said, his solution is something quite niche, but I was wondering if there is maybe a certain fintech technology that's more predominant and a lot of companies pursue.
Indeed. Despite the fact that I say that we don't have to make categories, there are different fields and different kind of business. And historically, Belgium was very good in payments because we have, for example, MasterCard Europe, we have Bank of New York, Mellon, we have Euroclear in Belgium, we have Swift as well. All of those companies are active in payments. So this tradition of payments create an ecosystem where you have people with an expertise, with a knowledge in that field. So we can see a lot of fintechs active in that field in payments. That's one. Second one, where is the source of regulation in Europe? It's in Brussels. We have the European Commission, so they love to create new rules. They love to create new regulation. They print a lot of paper for that, and so we are the basic source of regulation in Europe. So it means also that we have skills and we are in the good place to create RegTech, regulation technology companies. So we have a lot of RegTechs as members of FinTech Belgium. So if I want to spotlight two categories, those are the two ones, the biggest and the largest. I saw also a question about the field study or the tool in FinTech, and I think it's related to what Edouard explained and also what I just explained. For me, one of the key for digital finance is data analysis. Data is really the new oil. You can do a lot of things with data, and the quantity is so huge that you need very good analysts to work on those data. So if you want to have an interesting job, don't hesitate to study data analyst, and you will find a very good job, well paid and very interesting.
Thank you for your answer. And now, you already mentioned, for example, how obviously Belgium has Brussels, which is the capital of the European Union, and some companies would pursue solutions that are related to handling regulation better. But I would wonder more in general, both from an industry perspective as well as a startup perspective, why is Belgium an attractive country to open a fintech company? I mean, first of all, is it an attractive country to open a fintech company? And then why would you think that's the case?
I would say it's not a bad country to open a fintech or to launch a startup in that field. I can mention some advantages, and then I can mention also some disadvantages. One main advantage is the location. We are the heart of Europe, so it's a very good point. You take the train, and in a little bit more than 1 hour, you can reach a lot of European capitals, not to mention Amsterdam or Paris or even London. So that's a good point. Second, Brussels is a very international city, so it's very easy to find interesting profiles with an international background. So if you want to open new markets, it's doable in Brussels. Third is the quality of life. Real estate, it's still reasonable in Brussels if you compare it to London, if you compare it to Paris. This is changing, but for the moment it's still affordable. So that's also a good point. Brussels is not that big, so it's still a human-sized city. That's for the good, and also the university. We have good universities in Belgium. So it's also good for the companies when they need to find resources. The disadvantage for me are first the size of the market. Belgium is a very small country, and you don't have one single market. It's, in my mind, a triple market. You have Flanders, you have Brussels, you have Wallonia, and the three are different. Maybe you can merge Brussels and Wallonia, but Flanders is definitely another market. So if you want to develop your sales, it's very complex. Another disadvantage is a certain conservative spirit of the regulators. It's changing. Just last year we saw an evolution, but we don't feel the governments and all the public sector very dynamic with startups and fintechs. For example, you have countries where it's mandatory for public procurement to buy like 25 or 30% of the procurement from startups. In Belgium, it's not the case. It's too complex. If you want to sell something to the state, you have to fill in thousands of documents. It's very complex, so you don't see any startup. And it's not only on fintech, but in general, startups selling to the government. And the political structure is much more too complex, so nobody understands. Even themselves, they don't understand how it works. So it's difficult for an entrepreneur, for a citizen to understand this jigsaw. So yeah, plus, minus. Then if you live in Belgium, it's a good place to start a company because it's your homeland.
And yeah, leave me room for speaking, Xavier, please. But I mean, if I may, I would like to compliment, and it's not my deed to repeat what you said because I cannot agree more with what you said. I just would like to emphasize, to stress on a few points. The first one, and just to bounce on your last point, it's close to you. And that's very important. One of the chances that we have in Belgium, it's a very small market, yes, but in terms of geography as well, that means that, I mean, beyond COVID, right? It's super easy. Take your car, take the train, go visit a customer. You can meet a customer in less than an hour. That's super easy. So during the day, you can see two, three customers. That's pretty easy. Look at France, look at Germany. I mean, when you have to visit a customer, it can take the day, right? Or even 2 days, and you probably have to spend a night before you can see your customer. So that's a huge difference. Now, it's true, it's a super complex market, right? Because of the languages, because of the different cultures. I will not come back to that, but somehow I see it as an advantage to start, right? Not to do full business, but to start. Why? Because I mean, for those who like music, concerts, most of the, I mean, the French or Dutch or other singers, they usually start in Belgium because Belgium is a super test market. If you succeed in Belgium, if you can start in Belgium, you can go beyond Belgium afterwards because it's so complex that the level of failure is pretty high. But once you make it, you can make it pretty much everywhere. That's very important to know. Now, this complexity, again, can be a disadvantage. That's true. But at least as a starting point to prove, and the notion of proof is important, to prove that your business is viable, that's key, right? Now, I would like to add to that, it's true, the fact that the cost is pretty low, the experience of the people is pretty good. What I don't like about Belgium is this difference between the north and the southern part of the country. And let me call it chauvinism. And I will not speak about chauvinism, the north for the north, the south for the south, not at all. I will speak about something that I like in the north of the country, is chauvinism for Belgium, much more than in the south of the country. Why? Because in the north, for example, we have one of our sales guys, Dutch speaking. When you speak to people from Flanders, you say you are Belgian, they want to buy Belgian first. I don't think that they care whether you are French speaking or Dutch speaking. When you work in the south of the country, so in Wallonia, Xavier would be happy to have your experience about that. I think that people are not chauvin at all, and they would even prefer actually buying outside Belgium than somehow, and my apologies for using it as a shortcut, but to enrich your neighbor, right? They would really prefer buying French, buying Dutch, buying German than buying to the startup at the corner, which is probably a friend of yours or the friend of a friend. And that's not good. Now, Brussels is a bit different because Brussels, I see it more as the international side of the country. So you have many big brands over there, and there we face other issues, but that you would face actually in Belgium or outside Belgium, related to the complexity of larger companies. But overall, use Belgium as a test case, but then go beyond.
Yeah, thank you both for these interesting insights. And It's definitely a very interesting point what you said, that in Belgium it comes a lot to the different mentalities that we have in the different regions of Belgium. And I was wondering now to kind of link it to what you already said, since I know that you have quite some experience in entrepreneurship, and this is mostly a question that is not necessarily about finance but entrepreneurship in more general. You already said why you should start in Belgium a startup. But because it's a good test market, but at the same time, what would you say from your experience in general was the biggest challenge in entrepreneurship in Belgium? Is it still the differences between the regions, or would you say it's something else?
It's worse than that. It's manage my own emotions and the emotions of the team, because when you work for a large company, you have emotions, but you have stability, and somehow you have peace of mind, right? Somehow. Of course, you have the politics, you have to deliver your work, you have to spend a lot of time to deliver what you need to deliver. You have a stress related to delivery, but you don't necessarily have the stress of succeeding, or you don't necessarily have the stress of bringing money to your family. As far as I'm concerned, well, I didn't say it, but I've got 3 kids, right? I'm married, I've got 3 kids. The oldest is 16 years old. And when we decided to create AiVidens, I mean, all the lights were green, right? Which means that financially we could start it, but it was within our own means, and it was the same situation for the 3 of us. But the first month, right, you try, you don't know whether your idea is valid. The only thing that you know is what the people you interviewed before told you, and they said, yeah, I like your idea. If you make it, I will buy it. It doesn't mean that they will in the end. That's one thing. The second thing is, even if they tell you that they will buy, they never told you when. So that's second. So that means that you need to, from the idea to selling it, you need to create a product. You need to make sure that the market adheres to what you do. And that may take time. And this time can be months, well, can be a couple of months, can be half a year, can be a year, can be 2 years. And the question is, how much time actually can you last? That's one thing, right? So when you have this pressure on you, and you really need to understand it, I call it a pressure, and don't take it bad. I'm having a lot of fun. I like what I do. And those are probably the best times that I ever had, right? Because I feel completely free in what I'm doing. But I still call it a pressure, because what happens is that at the beginning, everything is slow. I mean, today I meet probably 2 or 3 customers a day. My days are packed. It's back to back. Business is running. It's picking up. It's really good. But I'm a bit less than 2 years afterwards, after we started. When we started, I will always remember, with one of my founders, friends, Nicolas, we spent hours in my living room imagining the algorithms that we would put in place, without knowing whether they were the good ones, without knowing, we had no test data, nothing. So we tested it with one company that agreed to provide us with their data, but it was one. Today I'm speaking about 2 or 3 a day. There it was 1 on 3 months. Afterwards, you create the first calculation engine without having the screens and so on. You start visiting other companies and they tell you what you are doing is crap. You start meeting with the first investors. They tell you, why do you do that? Nobody needs it, right? So you have to spend a lot of effort to convince. And then 3 months or 4 months afterwards, you have someone telling you, yes, I like it. It's great. And then your emotions go up. You feel boosted completely. You want to work. But then before you can deliver, it's another period that goes on. And then during this period, other companies tell you no, and so on. So it's really, I would call it a real roller coaster. You never know. A last example, unless you want me to, I could talk hours about that. But the last example, we decided to raise funds just before COVID. And well, what happened, we started in December. We were pretty well engaged with different VCs and so on, super good, high value, great, about to sign. And the day they announced the lockdown, I will always remember, it was a Monday. Well, I mean, the day we got called was a Monday, 9 a.m. on the Monday, first call, we had 3 key investors. The first one calls me and says, well, look, there is a lockdown. It's a huge crisis. Sorry, we have to support the existing startups. We can't support you anymore. So we stop the deal where it is. In one call, 15 minutes, we lost 400,000 euros as a support. 2 hours later, second call, second key investor, private investor. He tells me, well, look, Edouard, I'm really sorry. I'm losing a lot of money now. There is a big crash. I stop every investment that I make. We speak again in 6 months, a year from now, but now I need to stop. And I had lost in 2 hours, 650K euros. And I mean, we had hired people and we didn't have enough customers to live based on those customers. So suddenly the question comes, well, look, we know we can still last 2 or 3 months with cash. What shall we do? How shall we pay ourselves? How shall we pay the guys? We can't benefit from the support from the government. We were convinced that we had a great idea. And then suddenly, April, we started to have new customers, new companies that said, well, with COVID, we would like to better understand what our receivables portfolio looks like. Where are the issues? That was the first very good news. Based on that news, we could contact other investors. We contacted them and they decided to go with us. I'm making it. But I can tell you, I haven't slept for many nights because we were willing to find.
Yes. Thank you so much for all these interesting insights. And I also love the fact that you touched upon the COVID situation and how it was both a challenge, but also an opportunity for the fintech sector, given that actually some of the following questions will be focusing on this. So now I would like to give the floor to Charlotte, who will take over and ask some of the next questions.
Right, so hi. So I'm Charlotte, I'm the event manager at AFC Brussels. I'm going to take the lead with that second part. So we have 6 questions left before our Q&A session. And so this is our last individual question and first question of the second part, and it's for Xavier. So Xavier, as FinTech Belgium represents the whole sector, what would you say is the added value a fintech company gets from being part of FinTech Belgium as a federation?
First is to talk same language with peers. It's always great to meet people suffering the same pain and getting the same joy. That's one. But more than that, is to build a network. You have to know that exactly what Edouard explained, and I have a lot of respect for what Edouard made with his company, because it's very difficult to become an entrepreneur from scratch. Me, it's the opposite. I never been an employee in my whole life, so I am an entrepreneur since I am 20. So it's a different story, and everything is related with the network. You need to know people to accelerate your business. So FinTech Belgium, one is to create a network. So it's to meet other people in the same industry with the same, the same knowledge. Second is to get promoted. When you have a company, it's difficult to be promoted unless you spend a lot of money. So one way to do it, it's through an association like FinTech Belgium. And third, it's to be part of an organization that can speak on your behalf with the regulators. And that's one of the questions of the participant from Diego. What are the main regulatory constraints a fintech company face in Belgium? They are the same actually as other countries, because we have in Europe the same rules applying to the same to all the countries. So if you go in in Denmark, in Portugal, in Greece, or in Austria, we have the same rules. But there is always a national interpretation. That's one. And then the skills, I mean the knowledge, the experience of the regulator. If they see for the first time a cryptocurrency company, they have to discover what is a cryptocurrency. If they saw already 20 companies in cryptocurrency, when you are the 21st, it's easy for them to understand your business. So the knowledge of the regulator is very important, and we participate to that. So that's the main reason a company should be part of our association.
Yeah, I understand. It's always easier to promote your startup company if you have your fintech friends. You can share your knowledge, and it's easier to keep going, and you always keep learning new things. Thank you for your answer. Now we're going to move on to our second question, which is more about digital transformation, and it's for both Edward and you. Would you say the COVID pandemic has accelerated the digital transformation in the financial sector? If so, why, and in what ways? I believe we talked a bit about it during this event, but maybe more in detail.
I will start with the general picture, and then I think Edouard can explain his own experience, how he developed his company with the COVID. So in general, what we saw, it's exactly what Edouard explained. So in March, everything was frozen. All the companies were in a still mode, saying, okay, we wait. And quickly, when I say quickly, it was a question of weeks. We saw companies moving because there was no choice than to embrace digitalization. So yes, we saw an acceleration, and obviously some companies, they suffered from the COVID because their clients were with no activity or with reduced activity. Because some sectors were totally closed. So if your clients, they don't have business, you don't have business. So some companies, they suffered from that, and others, they accelerate and they gain new market shares. So it's well balanced, but it's more positive than negative for the digital finance industry in general.
Mm-hmm. Yeah. I would like to answer in two ways. The first one, I actually come from the financial services industry, right, from a software perspective. So I would like to answer the question with my experience from the past. And then I will nuance it with what we see now with AiVidens and with the finance market, but beyond banking and insurances. Now, what we used to say 5 or 6 years ago, right? We used to say that with the emergence of open banking, PSD2, PSD1 was already being talked about. We actually were talking to the financial services industry, to banks mainly, and to say, well, look, banks, you need to transform yourselves. You need to think differently. And that's when we saw actually the first emergence, I would say, of fintechs, when banks started to partner, I would call it like that, with fintechs. Why? Because banks were actually stuck into the way they were structured, with all the politics and with all the weight that they had, right? And people thinking differently or thinking, well, I will not comment, but thinking differently. And actually they felt the need to start working with other people, fintechs, that had a different opinion on the market, and that were each of them looking for niche solutions capable of bridging the gap, actually, between the customer requirements and what the banks were capable of delivering. And especially with the fact as well, and that was combined with the emergence of the GAFAs, the Google, Apple, Facebook, and Amazon, that were actually starting to offer payment solutions for those markets. And if we come back then, most of them were willing to position themselves as a bank for customers, and all of them had a huge install base. So most of the banks were fearing their emergence, and they were mainly focused on customer satisfaction or customer experience, where banks were mainly focusing on, the back end and processes and providing services and new products. So I would not say that this emergence of fintech and the speed is now, this acceleration is coming now. Actually, to me, it started 5 or 6 years ago in the context that I just mentioned. Now, what is true, however, is that, and I will then generalize it to all the financial departments. Financial departments in general are considered as being, well, old-fashioned, right? Processes are defined. A debit is a credit. A debit is a debit. Sorry, a credit is a credit, and that's it. Again, summarized to an extreme. Now, usually, when you go to large corporations, most of the investments were actually covering needs from the business, needs of servicing customers, but they were not that often servicing the needs from the support functions like finance departments. And though we were speaking about digital transformation of those departments, but maybe 2 or 3 years ago, but some occurred, but many never occurred by lack of means, simply. And the good news is that from COVID, and as I said as an introduction, cash is king even more now, that companies want to have a much better control on their working capital. And working capital now, this control is becoming even more vital for those companies, that many of them started investing, truly investing, in the digital transformation. And many of them are now making a huge leapfrog actually towards transformation, to a point that, just to phrase Christine Lagarde, she made one of the many speeches end of January, but when joining the Eurogroup, she talks about a 7-year leapfrog that is currently happening now in terms of digital transformation in the financial departments. So yes, COVID at least had that impact to financial departments, that they had more budget to start delivering better and still focusing on customers in a more global project related to customer satisfaction and customer experience.
All right, thank you. So we can say that there were obviously positive aspects for the fintech startups, and the COVID pandemic has been a good opportunity. Yeah, a good opportunity for bigger players to acquire fintech companies. But you were also talking about being more in control of your capital. And Correct. That is what my question is about. So how would you explain, well, you already how would you explain the intensive what's going on to my screen?
Yeah,
merger and acquisition in the fintech industry. And is it something that has been observed in the
Yeah, go ahead. Yeah, your voice was breaking up, and now it's back to normal. But we lost Charlotte. But I think, I understood, Xavier, that there is a question about the evolution of M&A in...
Yeah, exactly, during COVID,
yeah, so,
the intense M&A activities and how we could explain why they've been taking place during COVID.
Yeah. So I think, Xavier, this one is more for you, I would say. I'm less familiar with the topic.
Okay.
So the hot potato is for you.
Actually, I think we need to understand first the macroeconomic situation. So we have today central banks printing money with a speed and a volume that has never been seen before. It's the first time in history, actually, that the central banks are printing so much money. So it means that in the market, there are a lot of money, a lot. But you cannot imagine, it's incredible. So this has an impact on the business, because people with money, what they have to do with their money, they have to invest. Otherwise, they are losing their money because the interest rates are negative. And so you have this movement of acquiring companies almost at any cost. Second, when you see the different corporate companies, they are challenged by the digitalization of the economy in general. And as we mentioned just before, COVID is an accelerator of this movement. So some of them, most of them, they need to catch up to be sure that they are up to date with their digitalization. And it's always less expensive, or almost always less expensive, to buy a successful company than to develop in-house. So probably AiVidens will be a target for corporate companies in a few months or years, because they are very good, they have a good technology, and it will be cheaper for a big company to buy AiVidens than to develop in-house. Because money is not always enough. You can throw tons of money in a project inside a company and to finish with a failure. So yes, M&A will continue, maybe not as we have seen 5 or 6 years ago, when we saw big banks buying very small startups, because when the startup is too small, the result is the bank or the big company, the corporate company, kills the small company, the startup, just because all the layers of governance or internal rules, process, etc., will kill the creativity of a small company. So they need to wait a certain maturity, and when this maturity is reached, then they can buy. Other, they prefer also to never buy and to try to develop in-house. There is one of the 4 big banks in Belgium, is the way they do. They say, we don't need to buy, we can do it ourselves. Most of the case, it's a failure, but it's their choice. Other, they prefer to make cooperation. Why to buy when we can use them as a supplier? So they make a contract and they use it as a supplier. But just to conclude, M&A will continue, and probably with even a higher valuation. And so yes, it's the good time to create a business now.
All right. Sorry for the Wi-Fi issue. I hope it was entertaining at least. So for the next question, as you've both been students, you've just graduated, I suppose. I have a question about your opinions on universities. So fintech is naturally a field that requires both technology and financial expertise. So according to you, what could universities do to equip well students for a fintech career, or is it rather a matter of learning by just practicing or doing on yourself?
Yeah, I would like to start with this one. It's a good question, but let me start by saying what kind of people we do recruit and why we recruit them. Whether we recruit the best engineers, the best programmers, or the best finance guys, I don't know, and I don't think so. Whether we recruit passionate people, willing to work, willing to experiment things, willing to learn new things, willing to be exposed on the market, and having quickly responsibilities and being committed to deliver, that's what we seek first. So I would say soft skills are really key beyond all what you can study, right? Yes, it's a plus because it brings you methodology, right? That's what I believe. I mean, methodology is one thing that you learn. Yes, you learn about finance and you may learn about coding and stuff like that. It's a plus, but you as individuals with your own way of seeing things and your new ideas, that's really what makes the difference. Your diploma may not necessarily make the difference anymore, especially if you want to work in a fintech or in a startup. One of the guys that we recruited doesn't have any diploma, but he's got all the characteristics that we were looking for. I mean, of course, well, he knew how to code, right? We were looking for a developer. Well, he's developer, so I'm talking about this case. I can tell you about other cases, but he doesn't have any diploma, but he was super committed, super good, capable of working by himself without necessarily always having or requiring the support from the founders to guide him. Of course, we do guide him. Of course, we make him learn and evolve, but the guy is willing to move as a train, like a locomotive, and go fast and quick. That's what really matters. So be passionate, be motivated. That's really your starting point. That will make the whole difference. Your diploma is a plus.
Xavier, what is your opinion on that?
Yeah, it's exactly the same. I think the first point is what I call soft skills. So hard skills you can always learn. So yes, school is good for the hard skills, but soft skills doesn't come from the school. So it's difficult for the university to change the mind of a student and to build a soft skills. Maybe what they can do is to make a selection, to select the students with the right soft skills. That's a possibility. But I don't believe that it's the role of a school, high school, university, whatever, to change the soft skills of a person. And definitely, I hired personally tens and maybe hundreds of people, and the first choice comes always from soft skills. The person with the right soft skills, even if they have weak hard skills, it's not really a problem because the person can evolve, and it's not the case with a deficit in soft skills. So you have to show your motivation. You have to show that you want to work. You want to you have to show your ambition. That's very important. If we see a young employee who just want to make to arrive the latest as possible and to leave as soon as he can, and with a not real implication during the day, even with the best diploma and the best skills, it's useless, especially in a small company. So yeah. I agree with Edouard 100%.
Yeah, and bear in mind that that's probably going to be important for you. It's not because, well, as far as I'm concerned, I've got 20 years or a bit more than 20 years of experience. And it's not because I've got my past, and it's not because I'm one of the founders or CEO of the company that you cannot bring new ideas. And what we expect actually from the people we hire is to also guide us or come with ideas, think differently. And that's what your generation is much more capable of doing than mine. So be yourself. That's super important. Be yourself. And be as creative, as critic, as whatever you can be. Never put yourself in a box. Never.
Yeah, I agree. That's why that's why we're in student clubs, basically, because we're always trying to learn new things and to teach others different things, because, you know, obviously at universities it's very academic. But I wouldn't have thought about organizing an event about fintech if it was like on my own, but it was a collab. So we are always learning new things. So hit me up, DM if you want to become a member also. No, but this is my last question, and thank you for your opinions. We'll discuss everything during the Q&A, but to wrap up, and this is more of a personal question, I believe. Where do you think the fintech companies headed towards in a post-pandemic world? Because, yeah, we're seeing a boom, but what about the future?
Xavier, you want to shoot first?
Okay, the most complex is for me. I'm not Nostradamus. I'm not able to forecast the future. But digital is here to stay. So we can expect more and more a huge digitalization of everything, and obviously finance as well. But we are facing big macroeconomic challenges. And so it's very difficult to forecast and to see what will be the future. But if I want to show some examples, for example, China is becoming a cashless society, a cashless country. So we have to imagine that a country that was one of the poorest in the world 30 years ago is now in advance in technology, and people, they adopt it. It's not only a question of getting access to the technology, it's the adoption. So people are using the technology to stop paying with cash. It is a huge change. And we can see Africa following the same trend. So the future is not maybe in Europe. Maybe the future is elsewhere. I don't know, but it's a question to ask. So, and then what will be the role of the state? The state is limiting for the moment our liberties for what they say our good, to preserve the life of people. But they are more and more involved in the economy, and especially in the money supply. And it can have a huge impact in our life, because if you have a society without cash, so a cashless society, it means that all the transactions are registered somewhere. That's one. Second, the money supply today is not done by the central bank; it's done by the commercial banks, and they plan to change that. So there is a plan for an e-euro, so a crypto euro, and it will be beside the euro. So it will be a second euro, and this can be also a risk for our society. And then yes, all of this will be a challenge. And you are the young generation, you have to pay attention to that, to keep the good of the technology and not the bad.
Mm-hmm. Again, I will play the easy role here. Thank you, Xavier, for starting answering that. No, what I see, and again, I will generalize not only to the financial services industry, but to finance in general. What I would like to say, the good news from COVID is that even though everybody knew that cash was king and that working capital was important before COVID, right? Every business school will tell you, and we have learned that since ages, none of them really put that in practice, right? At least as close to, none of them were as close to their cash as they were now. So from that point of view, COVID had the positive thing of creating awareness about the fact that financial departments were lacking behind other departments in terms of digital transformation. So there is a lot of room actually still to create fintechs in Belgium and in Europe to help those companies still improving in this area. So that's the good news. But what Xavier is saying about Africa and Asia is completely true as well. They are super creative countries. We have a lot to learn from their creativity and a lot that we could use as well to further expand in Europe. So I definitely see the future of fintechs in Europe fairly bright actually, and fairly positive, and keeping growing. a few years after COVID still, yes.
Okay, thank you. I believe we have now answered all our planned questions. So I suggest you follow with the Q&A session. And I'm sure we all have burning questions that are waiting for an answer. And Daniel and I are going to take the lead on this one.
Yes, first of all, also maybe to remind people that you can also ask questions with your voice. So if you raise your hand, we will be able to unmute you. But if not, we already had two interesting questions which weren't answered in the chat. So maybe we can start with one of those as well. So perhaps until some participants will raise their hand, I will ask one question that was asked by David Lagrange. So he said, I know that fintech is so much more than cryptocurrencies, but given their recent bull run, I would like to know exactly how important are cryptocurrencies and blockchain in the fintech industry.
Okay, maybe I can try to answer. First, we have to make the difference between cryptocurrency and blockchain. Blockchain is just a technology. It's like if you do C# or Java or whatever, it's not a language, but it's a technology. So a blockchain, okay, you can use or not a blockchain as a technology. Cryptocurrency is different. Cryptocurrency can be an asset, can be a money, can be a scam. So there are different kind of cryptocurrency. I think we can split the cryptocurrency in three categories. One are the officials. I just mentioned before that the European Central Bank is working on the project of a crypto euro called e-euro. So this will be interesting. I don't know what they want to do, but it's interesting. Second is big cryptocurrency like Bitcoin. Everybody knows Bitcoin. But Bitcoin, for example, is not a money. If you want to pay someone with Bitcoins, it takes half an hour to make a transaction, or maybe 10 or 15 minutes. It's not convenient, and it costs a lot. The cost of a transaction is approximately 10 euros. So who wants to send 10 euros to another person if you have to pay 10 euros in energy to make the transaction? So it's more like a speculative asset. And then yes, you have all the ICOs, so initial coin offering, with people creating their own cryptocurrency. Then you have to look at the collateral of the currency. What is behind? Because it's tokenization, so it's another industry. It's a tokenization. Yes, there for the moment there is a bull run, but then there is another question: is the cryptocurrency going high, or is our money going down? And with all the money the central banks are printing out for the moment, probably it's our money who is losing its value. And you can see that by the increased price of a lot of assets. Real estate is booming. A lot of assets are actually booming. So we can expect that we will have inflation in a few months, years, and then means we'll have interest rate going up. And then I don't know how our countries will repay their debt, and most of the problem is the interest. But that's another story.
Yes, we have a question from Louise, which thank you, but because it's very difficult to predict the blockchain world, because I see that personally, I feel like everyone is talking about buying Bitcoins or other coins like Ethereum, things like that, even shit coins, what we call shit coins, but it's still very vague. In this whole COVID pandemic is basically telling us that that we have to buy bitcoins, it's gonna burst or anything like that, but it's still very vague because I believe that, tell me if I'm wrong, but I believe that cryptocurrencies also work with whales, which are people that have cryptocurrency, but this is another field. So I believe we should move on to Louis' questions, which is how have fintechs influenced traditional banks and insurances on the usage of big data for CRM processes, and how do you think they will influence them in the future?
This is definitely for Edouard.
Yeah, well, I mean, it's a bit like I said earlier. I mean, banks, when you look at the history of banks, like I said, they were not really focusing on providing the perfect customer experience. They were mainly focusing on selling products and services to their customers, and that's it. And it's actually thanks to fintechs that they started learning about how to better serve their customers and really focus on the customer experience, like I mentioned earlier, like the GAFAs are doing, because they needed absolutely to acquire that experience from the outside world. I know that some of them have succeeded without, right? If you have a look at one of the 4 key Belgian banks, they have a wonderful app from which you would like to make payments every day, right? I think it's the top 3 app in the world in terms of payments. So they managed to do that. But we speak here only about one app, but servicing a customer and working on the customer experience, that's something which is much wider than just an app. It's really a culture that you need to bring into the whole company. So that being said, you have banks that were created from scratch, like I don't know if you know the bank called N26, for example. The bank was created from scratch with really the purpose of servicing full customer experience to their customers. Now, the other traditional banks, they still have to reinvent themselves completely. And whether they will be capable of doing it by themselves, I don't believe so. So yes, big data is one thing, right? CRM is another thing. Well, somehow it's related because CRM are data related to their own customers, but only to the interactions with customers, to the relationship with their customers. But you have payment data, you have a lot of data in banks, and they are only at the beginning of their journey to transform to the bank of the new world, I would say.
Yes, thank you, Edward, for your answer. And I think we also got a very interesting and long question for you as well. I maybe take it one by one. So Sepe asked that basically, as you already mentioned, working with artificial intelligence data is the key in the software you provide. So he asks, how do you make sure that the data is of high quality? For example, making sure it is unbiased. And then he continued this question and asked, how do you measure the success of your application?
That's a tricky one. Well, first of all, before I answer that, I would like to say, where do we get our data, right? We get our data from different sources, and one of the sources, of course, are our customers. Why? Because we, I mean, in the solution that we created, we decided actually to tap, I would say, mainly in the transactional data of our customers, meaning invoices, payments, CRM, consumption of certain services, and so on, and to correlate, actually to establish correlations between the different attributes so that we could then predict whether the payment would occur on time or before or after, summarized to an extreme. Now, whether this is sufficient, the answer is no. And that's why we as well decided in our sales process to very quickly engage with prospects and very soon in the process to work with what we call a proof of concept. That means that we sign a contract, right, with a prospect. They provide us with sample of data. And that's where actually we very quickly identify what exactly is the level of quality of the data. How do we know? Well, first of all, because we gain experience over the time. And second, because, you know, when you work in finance, actually biased or unclean data always have the same sources. A payment, I mean, simplified again to an extreme, a payment which is not matched correctly with an invoice, a credit note which is allocated to partially to an invoice, but which is not correctly linked, etc., etc. So you got used actually to master that, and because of the way we created the algorithms, we can very quickly identify the issues that may occur in terms of data quality. Data which are delivered to us. That's one. Second part of the question, let me read it. Yeah, how do you measure the success of AI application? There are different ways of measuring it. I don't know if the person who asked the question is acquainted with AI. I guess the person is. But I will try to generalize and to make my answer pretty easy. Because, well, I need to dig a little bit into the technology here, but to make it very simple, and I will try to make it as simple as possible. The algorithms that you work with will actually themselves, right, with the support of a human a bit, determine the probabilities of success. Why? Because from you make the system learn from the data, you teach actually your system how to use the data, and you create connections between the outcome of the calculations and the source of your data. That's what you do, right? Now, the system can predict a percentage of accuracy. Why? Because again, summarized to an extreme, what the system will do, the system will draw a line or a curve to summarize all the dots of your data on a screen. Again, I'm simplifying to an extreme. And the percentage of success seen by an algorithm actually comes from how close or how far is the dot towards the line or the curve that has been drawn by the algorithms. I hope I'm clear in what I'm saying, because I'm trying to use easy concept in something which is not. Now, what we do next to that is on a regular basis with the data that we get from customers. So we have our own predictions, and after the prediction comes, we have the real payment. And what we do on a regular basis is to check actually the difference between our prediction and the real payment. And that allows us as well to say how accurate we were. But the notion of accuracy is a tricky thing, because are you accurate for what? For 1 day? For 1 day plus minus 1 day? For 5 days? For 10 days? And it all depends what exactly you want to do with the data and the type of prediction that you want to do. So if you want to be, close to 1 day, well, we have certain ranges of percentage of probabilities that we want to reach. And we usually say between 65 and 70% to the day. When it's bigger than that, bigger buckets, bigger segments or classes, as we call them in AI, then we can reach higher level. But again, higher level of probabilities. But again, the notion of probabilities will also depend on the number of attributes or different types of data. By type of data, I mean, do you have a product name, product family, product level of maturity? Do you have a customer geography, customer demography, and so on? And all of these will influence as well the number of correlations that you can start to do between the data, and then the level of accuracy. But so to do that, 2 ways. On the first hand, the training self, and the probabilities related to the training. And second, the fact that on a regular basis in our production system, we compare the actual payments with the predictions.
Okay, thank you for your answer. I think we have a question from Nicolas Berger. Maybe you could unmute yourself.
I can. I will do it. Just yeah, you should be able to talk, Niklas.
Okay. All right. So my question just goes back to what you said earlier, regulation, that in a lot of ways the government interferes with the development or with the positive development of fintechs. I just wanted to know, what could regulators do better in order to allow fintechs to flourish in the future? Where is there room for improvement?
Yeah, start and I will continue. Well, same. I've got experience as well in that.
The room for improvement is, there are different rooms. One is the uniformity among different countries. So I told that regulation comes from Europe. So normally it's supposed to be the same in all the countries of European Union. The reality is slightly different. So we have what we call gold plating. So gold plating, you take a European rule and you add a layer more protective. So 40 or 50 years ago, countries, what they used to do was to push their own companies to export and to create better market conditions for them. Now it's the opposite. They want to overprotect their own market, and so they put what we call gold plating. So that's a big hurdle, and to fight against that, European Commission is changing the way they do new rules. So instead to make rules that must be put in the national legislation, they do directly the legislation from the European Commission. It's a little bit technical, but you understand what I mean. Second, what is important is the proportionality. So if I do, as a small company with 1 million euro of investment and 10%, the same business as a big bank, probably if I fail, the consequences are much lighter than a big bank. So the proportionality is important. If I have to respect the same rules as the big players, it's not fair. So what we ask to European Commission and also national regulators is the proportionality. That's something important. And the third is to create room for creativity. So it's to allow new projects to emerge. And how to emerge is to limit the regulation for new projects. And what there is a name for that. We call this a sandbox. The sandbox, it's a place where you can play. It's really a sandbox. You can play with new project, new algorithm, new solution. And then if it works, you have to apply the full regulation or an intermediate level of regulation. And if it doesn't work, you stop and that's it. And so the investment to respect the regulation is not that high and not out of proportion regarding the risk of your company. It's what we ask to the regulators. Some they understand, some they understand less. But to be very honest, European Commission is very open-minded on that. And so it's our role at FinTech Belgium, at European Digital Finance, it's to explain this position to the European Commission because they are keen to listen. That's a good point.
Mm-hmm. And what I wanted to add, and by the way, Xavier, it's something that we need to speak in private, because I think that there are strong connections with FinTech Belgium, but I'm part of a work group in the supported by the government of Brussels that does not necessarily want to regulate how fintechs behave and to scope their business, but that's once more to, exactly as you said before, Xavier, to start creating local businesses for fintechs and more support local businesses for fintechs and SMEs. And this kind of initiative is super important because, like I said earlier, creating a startup and a fintech is all about do it yourself. And what you definitely want to do pretty quickly, especially if you want to raise funds and start, accelerating your business, is to very quickly prove that there is traction for your business. And very often what we see, and even we face this, even though I've got a lot of contact in large corporates, is the fact that one of the first questions, that you are being asked is, okay, but you are a startup. How can I be sure that you will still be there in 2 years from now? So why should I buy your product now or your solution now if I don't have any guarantees that you will survive the next 2 years? Knowing that, I think 1/3 or even more of the startup only survived those 2 first years, right? And at least the region of Brussels is now willing to put a framework to make sure that the startups and SMEs find a local economy and find their first customers to start creating traction, because that's super important.
Yeah.
Okay. All right, guys. I believe we've pretty much covered today's topic, which was the fintech boom during the COVID pandemic. We hope that you all now have a clearer understanding of fintech in general, but also what has been going on for the past year. And fintech in itself, it sounds like sounds a bit scary to your ears, but we hope that now it at least sounds less scary and ambiguous, and also that you enjoyed this event. So a huge thank to Edouard Beauvois and Xavier Corman, who were our speakers, because they took some time up for this. And thank you Capitant, because Daniel and Charles, because it was our first collaboration ever. And thank you Nikki too, because it wouldn't have been possible without them. Feel free to follow us on Instagram, Facebook, etc. But also you can email the speakers if you have any remaining questions. So if you have if you still have questions, you can send us a message on Instagram or Facebook or via email, something like that, and we will do the follow-up, something like that. All right, then I hope to see you at our next events, and I hope you had a great time with us. So I wish you a good evening, good night.
Thank you very much, everyone.
Yeah, thank you for the invitation, and don't hesitate to check our website, fintechbelgium.be. We have special conditions for students, so you are more than welcome to check and to see if you want to attend an event. You are more than welcome. Yes, thank you.
Thank you very much. Have a nice evening, everyone.
Thank you.
Bye, everyone. Bye-bye.
Bye.
Thank you. Bye-bye.
Bye-bye.